Today is Monday, August the 10th, and I'm going to keep this really short because the market is just unrelentingly moving to a high or to its all-time highs. And then the fun is going to start. So the McClellan oscillator nicked up a little bit. That's gotten out of this channel where it was bouncing over and under the zero neutral line. Definitely made a push higher there. The stacked volume looks something like this. So the volume was higher than Thursday and Friday, but pretty much in line with Monday, Tuesday, Wednesday of last week. It was decidedly in the favor of the up moving stocks in terms of total volume. The advancer and decliner, this is the difference between advancers and decliners. You can see it was way oscillating in big ups and downs while the market was going down and trying to recover. Now that the market is trying to, hit its old highs in the Dow and the S&P, we're starting to see these oscillations really narrow down. You can almost draw a little cone here and say that they're really coming to a fine point, something like this maybe. So let's now look at the charts because I want to show you something pretty remarkable about the S&P. This is the COVID drop. Remember, this is where we're heading. We're 1% away from the previous high of 33.89. But what happens if we look back in time? Look at this. Look at this move. If we take a look at this Fibonacci, this 300% one, this is the drop from the high of September 2007 down to the all-time, well, not the all-time low, but the low of the recession, March of 2009. So Obama had just taken office. And we look and we see, let's see how well Fibonacci projections, Fibonacci retracements work off of here. Well, the 61.8% was certainly important. The 100% was important for a period of about 3 or 4 weeks, but then it became important again when it came in for a test down here. Then off we went, and look, 161.8% proved to be resistance, came back to a test. Then we went up to 200%, and we spent about as much time at 200% as we did at 100%, and then we started to move higher. Then we had a pullback, and we fell just a little bit below the 200%. But then where did we hit? We hit 300% just around COVID-19 time, and then we dropped almost to 161.8%, and now where are we? We're right back again, where within 29 points of each other, you have the, well, you don't really. Yeah, you do. You have this 300% comes in just below, well, it's where we hit today, strangely enough. But I still think the 33.89 is the target. But now we have two Fibonacci coincidental numbers, 300% and 100%. And things are going to get really interesting when we hit 33.89. The NASDAQ, meanwhile, pulled back from its 150%. The Dow Jones, it is also trying to make its old high, but it's more than 1% away from that value. It's just above the 78.6. Apple regained quite a bit of what it lost. What is going on here? Let's just go back to the daily. And let's do that. So there we go. So Apple regained pretty much what it lost on Friday. So you have this engulfing day today where the highest point reached today was higher than the high on Friday. The lower was lower. So this engulfing is pretty promising. Apple got two positive targets, both of them over 420. From Wedbush and from, forget who the other one was, but they're good analysts. 138.2% is the next target, 468. That would be at the top of the targets that were called for by those two analysts today. Caterpillar had a big day, up 5%. What makes it big is it finally broke this trend line, which started back in January of 2018, was touched 1, 2, 3, 4, 5, 6 weeks in a row here, and then was rejection for these 2 weeks. Now we've come and we've moved above it. So Caterpillar rising that much, where is that coming from? Is it coming from China? Certainly not coming from any industrial movement in Europe. And there's been no talk in the United States of any capital spending on infrastructure. I mean, just paying people on unemployment is not going to buy more Caterpillar tractors. Home Depot, beautiful stock, powerful. It's hit its 127.2 now, just like it did on Friday. So be careful. It should slow down here, but it really is on its way to meeting these Fibonacci numbers here. These two Fibonacci's, this is 127.2 and 138.2, very close to each other on two different waves. That would be the magnet, that would be attractive. Whirlpool, pretty strong stock. Called that one a while ago. Now, I said that I didn't really trust what we call a shark pattern, but you got to admit, it's sure looking like it's going to achieve that shark pattern. So we hit the 178, we hit the 78.1%, 0.2% today, and we exceeded that. I'm trying to talk too fast and trying to keep this video at a reasonable time. Where are we going? We are definitely going to 33.89. But what happens when we get there because of that 300% coincidental Fibonacci from this big 2009 recession pullback? That's when the rubber's going to meet the road.